Welcome to the Indian Newsling Podcast.
Good afternoon, Rachna.
Good afternoon.
We have Rachna Dave, Director of 0800 Rachna, one of the foremost mortgage brokerage companies, one of the fastest growing companies in New Zealand, and winner of several awards, including the Indian Newslink Supreme Business Award
Indeed.
in 2022. And Rachna has been involved in promoting financial literacy among people across New Zealand. She has got operations in not only Auckland but also Wellington, Christchurch, Hamilton and other places. Her growing clientele feel very comfortable with Rachna because she is able to provide them sound advice and, more importantly, honest advice. Rachna, welcome to this Indian Newslink video and podcast. Please tell us, how is the market currently and how are people and you coping with the trends?
First of all, thank you so much for such a beautiful introduction. And when it comes from you, it means a lot. So thank you very much. Now, the market is your own individual perception,
Right.
to be very honest. Okay, the glass could be half empty and half filled. It depends on how you want to look at it.
Yeah.
Me being a very positive person, I would always look at the opportunities with the market available.
Right.
Okay. So at the moment, it's a very good market for the buyers who are first home buyers. I want to be very specific. Why first home buyers? Because the market is subtle at the moment, where the bank criteria are quite strict at the moment, and it is more favorable for first home buyers.
Right.
Therefore, it is very, very easy for first home buyers to get into the market where investors are not their competitors at the moment.
Right.
And it's not many properties which is going in the auction. So at least they are able to understand the process and get into the
But
ownership.
is the supply position in the market, is the supply less than demand or is the demand in excess of supply?
See, always the demand is going to be more than the supply. The reason is the basic infrastructure, where there is always a shortfall of the number of household
Right.
what we hold in the country. That demographics we cannot change, unfortunately. However, when we talk from the home loan perspective, we are talking more from the lending criteria perspective. And when we are talking about the supply, there is an excessive supply for the brand new properties, where there are a lot of projects that are happening which are half finished.
Right.
And or they are off plan projects, so they are in excessive. But when we talk about the existing houses, those are less in supply at the moment. And a logical reason behind that is because the market is quite stingy at the moment, where and owners are expecting way too unreasonable high price.
Yep.
And they're not able to get that price, and that's why if they are not in a need or in an urgency of the funds, they don't want to sell it and they want to hold it.
Rachna, over the last year or so,
Yes.
thousands of people have gained pathway to residency.
Absolutely.
Many of them are now more or less settled down. So first thing that they will now look for is to buy a home,
Yes.
because that's one of the ways in which they look as settling down.
Yes.
There have been many of them have brought back their partners or their wives, and I personally know at least 20 to 25 of them. They're looking for properties to buy. If an average individual wants to buy a property, what are the minimum conditions that they must satisfy to obtain a loan without much of a fuss through you?
Sure. See, when somebody who has just got the residency and wanting to buy a property, the basic things what they need to know is, are they resident or permanent resident of the country? That's the first point.
What's the difference?
So the difference is where you will have a condition on your passport for first 2 years you are a resident of the country, and after 2 years or 3 years where you have satisfied where you get an indefinite residency on your passport, then you become a permanent resident of the country. So certain banks have got certain criterias around that. So you need to be a resident of the country. That's the first thing. Second,
Even if you do not have an indefinite, in our case, for instance, we purchased a property within 6 months after we came to New Zealand. This was about 24 years ago. There were no conditions as to, they only wanted to know whether you have PR. That's
Correct.
about it.
See, so these conditions,
Have they changed now?
they will keep changing from time to time. And it is going to be, you will still get the house, but it would define where how much deposit is required when you are a permanent resident or on a resident
Or does
visa.
it change according to that?
Yes, but again, at this point of time, even a permanent resident or a resident visa holder is still able to get the house with 10% deposit. Last year, this time, resident visa holder were wanting to put 20% and not at 10%. So these things will keep changing from time to time.
Right, okay.
Maybe next year, this time, the criteria could be different. So whatever I'm talking is as of today, right now. So what would happen is you need to be a resident of the country. It would depend whether you have got 5%, 10%, 15% or 20% deposit. And also it would depend as to what is your household income. So if, say for example, husband earns 150,000 but wife is not working and not earning, the criteria would be different, because then she is an individual adult who is dependent on husband's income, against the criteria where husband is earning 75,000 and wife is earning 75,000. So still the combined household income is 150,000, but the things could be different.
Right.
Another thing that the bank would want to look at, that along with the deposit what you have got and the household income that you have, what sort of fixed financial commitments do you have? Now, fixed financial commitments could be whether you have got a car loan or a personal loan, or have you got a regular financial commitment to send money back home? Or do you have a loan back home that you need to pay? Or if none of these, but you just have one childcare expense, but that could be discretionary expense where you have got a family arrangement where at the moment you are paying for childcare, but later on that is not going to be applicable once the loan is effective.
So what you're saying is that each individual case is
It's different. Absolutely,
and
it's different.
the acceptability of a bank loan application depends on the propensity to repay the loan.
Correct. See, when I do the pre-qualifying questions, the basic questions that will tell me that whether we should proceed at this point of time or not, and those questions are you resident or non-resident? Do you have 5%, 10%, 15% or 20% deposit? What is your household income? And how many number of dependents do you have? At least it will give you the basic idea of which way the application is going to go. And then we get through the process of the application. Okay.
So which means you initially have an interview with your potential client,
Yes.
assess his or her situation,
Yes.
and then do you take everybody on, or are there cases where you're unable to proceed, saying that come back after 1 year or stabilize this or that?
See, I will always take this as an opportunity to meet a customer. How it would work is that whether it is a hot, warm or cold client, say for example, you may think that you are ready, but you may not be ready. There could be needs to be done on your application where I will still sit down, devote my 1 hour, guide you that these are the things that you need to do.
Right.
And maybe in 2 months time, we will review the situation and then proceed at that point of time. Or it could be something where you are 100% ready. Let's not waste the time. Let's get on to it. And a third one, which is the cold one, where you have just been a resident, you don't have anything at this point of time, but you still want to understand where do you start from, because that start point is very, very important. And that's where I will sit down, I will guide that these are the things that the bank will look at when they'll pick up the application. So keep work in progress.
So do you give
and
a
we do
choice to your clients, the number of banks that are available, or you choose the bank?
No. So because I deal with most of the banks,
Yep.
I will look at your particular criteria. Now, because I have been in the industry for a good 18 years, you will kind of know that where your kind of situation is going to fit which bank.
Correct.
So I will not do the trial and error of just putting your application to the bank where it is not going to go through.
Right.
But I will tell you that based on your circumstances, these are the options that we are looking at. It is worth putting it application to these 2-3 banks, or it could be where no, only this bank would probably look at your application. So I will tell you upfront and give you the options, and whichever is the right bank for you, we will approach that particular bank.
So, you require a lot of information before when you're discussing the first meeting with a potential client, and then that person progresses in your books.
Correct. So it is not a lot of information. It is the standard information where any bank would need is just want to see what is your savings history. So what they want to understand is whatever you are paying as a current rent to whatever is your future loan repayment, are you in a position to afford that or not? Another thing that the bank want to look at is that do you have the financial acumen or the understanding of how to manage your own finance? Which means, and how they look at it is that are you paying all your bills on time or not? If you have a car loan or a credit card, are those repayments being made on time or not?
So that do you look into all those things as well?
Yes.
Okay.
So we look at, so what we basically look at is your last 6 months worth of bank statements. That will tell you the truth.
So you're basically doing what a banker does.
Yes. So we do all the pre-qualifying things. We do the pre-assessment for your application. We will look into your bank statements. If we feel that, okay, these are the information or clarification which is required, we will do that. And then when we are submitting the application to the bank, we put a summary on your behalf because we are the bridge between you and the bank. So we have to narrate your story to the bank. So sometimes it happens where your case could be very challenging but very genuine. Then we have to articulate it in a way that bank understands that why we are mitigating or why we are supporting your application and why you deserve this loan and you will not default on the loan.
Okay. What is your success rate? What is 0800 Rachna success rate?
See, if I was to, you cannot put it in a percentage because whoever comes on my profile, sooner or later, they have got into the home ownership. Okay. How I define my success rate is that the application that I have put in, have I made sure that my clients have got the ownership? That is 100%.
All right.
Okay. But if I was to define where sometimes it could happen just because of the circumstantial base, your loan may not be approved for the amount you want at this point of time. It could be several reasons where you are unrealistic or the bank has some certain tight criteria and the bank wants to change it in a different way, but you have still got into the ownership at that point after making those
today's
changes.
Market with LVR, with the interest rate being what they are, fortunately they are not rising further, cost of living problem being acute now, cost of the essentials are going up. So what is the affordability of an average income earner in New Zealand, or does it differ since you operate in various cities? Is the affordability differs from Auckland to Wellington to Hamilton, or it's throughout the country the same?
From the bank perspective, the thumb rule is that average 5 to 5.5 times of your incomes is what they would look at giving you the borrowings. Okay, so say for example, if you are earning 100,000, you could be looking, depending on which bank we would go ahead with, it would be around 500 to 550,000. That could change to sometimes 6 times or 6.5 times or 7 times, but I have always taken it as an average of around 5 to 5.5 times, and that would be your comfort level, because I always tell my clients that there is always going to be a life beyond mortgages. Okay, so that has got nothing to do with how much the bank is wanting to give and how much, but are you in a position, bank may lend you 700,000, but are you in a position to repay that 700,000? Right. That's the first thing. Second thing is that from the bank perspective, they don't really care whether you are in Auckland or Hamilton or Nelson or Christchurch, because they are looking at what your incomes are, what your expenses are, and are you in a position to repay the loan or not. But when we are talking from the expenses side of it, I have noticed that people who are outside of Auckland, I have seen that they have been saving a little bit more than what they have been able to save it in Auckland.
In places like Hamilton or...
Yes, but again, but if I'm looking at the city council rates, for example, Auckland rates could be cheaper compared to say somebody in Wellington, because we are paying separately water care bills, whereas those people don't pay the separate water care bills.
Wow.
So those kind of differences are there, but it may not largely impact on the outcome of your borrowing capacity, because that is based on your personal incomes.
In our judges' remarks, when you were awarded the Supreme Business Award, one of the remarks that the judges made was that Y800 Rachna is good at customer management, that you're able to articulate with your customers and carry them through in the loan process from time to time. So what kind of customer management does your company have after a loan is sanctioned and a person gets the loan? How often do you meet that person and see whether everything is going well?
Okay, so usually my process is very simple, where I do 3 monthly, 6 monthly and annual review. So when you're catching up after 3 months, it could be just a simple phone call, just making sure. So first phone call is after the settlement within a month time, just making sure that the loan repayments have been set up correctly. Is there any issue, or is there anything that is unexpected within the loan systems that have been arranged? So after that, 3 months later, I will always just text or call up that, hey, everything is okay. Is your automatic payments and all set up? Is there anything differently that you would like to do? Otherwise, we will catch up in 6 months' time. So in 6 months' time, they know that they are expecting that within a year time, we have set up a goal that these are the things that we want to achieve. So at 6 months point, it's a checkpoint that, hey, this is what we had discussed, that after the loan, this is what a year looks like. So are we on track with that or not?
Okay.
And then when it is an annual review, so it's a reminder sent on a 10th month, so that you have got 2 months to choose, but then it is a customer's ownership to sit down with me. I mean, it's their owners, not my owners. My job is to follow up, set up an appointment. But historically, those customers who have done the regular reviews, they have been so very well in financially, like what you say, they have created the property portfolio, or they have repaid the loans faster, or they have been quite well educated with their overall financial management, I would say.
There is a saying that banks would like a loan to be as long as possible. Customers would like it to be as short as possible. In the process, how does a person like you fit in? How quickly are your customers able to repay the loan? How many years does it have on an average take? I know it depends on individual factors.
There is a myth, first of all, that the bank wants it as long as possible. No. The bank would put a maximum term for an owner-occupied property over 30 years. The only reason being that you should be in a position to afford the repayment for first 2-3 years. Yeah. Okay. This is a fundamental thing that one needs to understand, that in the beginning, you're mainly paying the interest, and after 2 to 3 years, you will start paying more towards the principal. Where my expertise comes, yes, you are taking a loan over 30 years, but you are not going to be paying the loan over 30 years. On an average, if you are paying it more than 15 years, then there is definitely something wrong that I have done in my job. Okay? So the way we look at is the way my expertise comes, that, and I can confidently say that the first property that you have taken, the day you have taken, I need only 15 years of your time for me to make a property portfolio of one owner-occupied property and 2 to 3 investments. And how it would work is that in that 15 years, eventually your owner-occupied property gets paid off fully. And you will have one rental property that will give you the passive income for your retirement. So that's how we create the wealth. But coming to your question, where on an average, within 15 years, you should be in a position to repay your loan. And those tips and tricks is something where our expertise comes, where we give it on case-by-case basis.
Right. Okay.
But customer have to have patience. For first, sometimes it happens where somebody has repaid it faster in first 7-8 years. Sometimes it happens that for first 7 or 8 years, they have just paid the minimum repayments, but after 8th year or 7th year, they have paid it off faster. But on an average, not more than 15 years. But one thing before we move on to the next question that I want to share as a humble request, that do not start making that mistake where right from the day one you want to pay excessive payments because you want to save the interest, and 3 years later you're just selling off the property.
Right.
So there has to be a balance, and the balance has to be how you can still repay a little bit more so that you are saving overall on the interest cost, but at the same time, how do you save the money to have that cash flow with you so that in 2 or 3 years time, if you want to upgrade the property, you have got the reserves with you as well.
Have you had instances where a person who had directly gone to a bank and obtained a mortgage payment but found that he or she did not get the best advice, and then have come to you and say, can you please take my case over? I'm not happy with dealing directly with the bank.
It happens many times, Venkatji, because first and foremost, bank staff is not allowed to advise. So they are not registered advisors. So I am a financial advisor with all the qualifications.
Banks are not allowed to advise.
No, so they are, in the past they used to be called as QFE, and now the new name has changed. So they are only restricted to give suggestions or recommendations on their product, but they cannot guide you, or they cannot tell you that this is the structure you should do or this is the way to do. No, they can only articulate the product and the services that can suit your needs, but they cannot sit and tell that this is the way to do it, or this is, because they cannot do that.
I see.
Yeah.
So that means the services of a mortgage broker becomes almost inevitable.
Yeah. So in the past they used to be called as mortgage brokers, but from just recent compliance perspective, you can only be licensed if you have level 5 certification in residential lending. Only then you are allowed to advise, and now the titles have changed that we all are financial advisors, certified financial advisors, and that's why we can. So say for example you came to me, I could actually give you very strong recommendation that this is your circumstances, this is your scenario, so these are the ways to do it, or this is the way you can save the money. You choose this structure, you choose that structure, and give you the option that if you choose 1 year rate, this is the way it will look like after a year. If you split the loans, this is the way to look at it. Or if you had affordability of paying $50 extra, have we split it so that you save the interest cost?
It's often said, Rachna, that in New Zealand at least, the most significant investment is property.
Correct.
People used to have jewelry, gold, or perhaps shares in companies, etc. That might be a secondary form of investment, but most people consider property to be a solid investment portfolio. How many clients will be able to afford or improve upon their property? For instance, if someone has obtained a loan of $800,000 and 3 or 4 years later wants to make improvements on that property, how does that work? How do you come in as a mortgage broker?
So it comes back on what type of a property that you have invested in. Okay.
Normal 3-bedroom house,
Yeah.
let's say.
No, so again, so where I'm coming from is if say somebody who has come in our portfolio right from the beginning, we guide them that you have to find a property which has got a potential capital growth. So say for example, if you have got a residential 3-bedroom property in a good location, because location and structure is the one who will retain the value of the property or the growth of the property. So say for example, if you bought a property in a decent location, every year you expect, at least in a very conservative market like this, about 2 to 3% growth on the property. So say for example 3 or 4 years later you wanted to do the renovations on the property. It will all depend on how much equity you have got on the property. Again, if you wanted to sell the property and upgrade, then it would be a different scenario. And on an average, if you had taken a loan of say 800,000 as what you're telling me 3 years ago or 4 years ago, you are expected to have reduced it at least by 60 to 80,000 in 3 to 4 years. So depending on the lending criteria at that point of time, if it is extension required or property improvement, in to say maybe add 2-3 bedrooms to it, and it is improving the capital value, then again up to 80% of whatever is the value of the property you can borrow from the bank, subject to your affordability.
So if I have to say that, if I ask you to set 3 goals for your customers who come to you for as a financial advisor, what would be the 3 goals that you set for them?
First and foremost is a very basic thing, that be real. Your first home is never your final destination. So get real. Instead of paying somebody else's rent, you pay your own mortgage.
Right.
So the more real you are and getting into your own ownership of the property,
Right.
earlier the better. So get real is the first goal. Second thing is keep reviewing your finances on a regular basis, so that how to take an advantage of the particular market at that given point of time to repay the loan faster, but also creating the equity so that in 2 to 3 years time from the first property that you've purchased, either you are doing a property upgrade or you are buying an investment property in 3 years time.
Right.
So that ultimate goal, as I said in the earlier conversation, in 15 years, if you follow my advices, you will definitely be the owner of one owner occupied family property, family home, and 2 to 3 investments.
Okay.
So that would give you kind of a comfort for your retirement. So in 15 years, my focus is to create your net worth of 4 million to 4.5 million, and net worth is your total assets minus your total liabilities is your net worth, so that you can have a secured retirement. And then after a certain age, you are working because you want to be fit, you want to be active, but you are not working because you have to still pay the mortgage off.
So can I say that from your point of view, there are 3 areas of activity for 800 Rachna? One is home ownership.
Absolutely.
2 is financial literacy.
Yes.
3rd is wealth creation.
Absolutely.
So to secure all these, do you have insurance advice as well?
I personally am not advisor for insurances, but I do have a colleague that looks after that. As I said, because the compliances have recently changed, so I cannot advise for
But
the insurance.
isn't every property required to be properly insured before it is?
So that is the house insurance that we are talking about.
Yeah.
And again, because house insurance is a different thing and I cannot do it myself, but the bank would do it.
Yeah.
But when you talk about insurances particularly, I talk about the risk insurances where life, trauma, mortgage protection,
Right.
that sort of a thing. So if I'm putting you in debt, I have to make sure that you and your loved ones are protected as well, and that my colleague who is compliant to do the insurances would look after you.
Rachna, there's so much to cover in this area, and we are very, very proud that you have done extremely well over the years. And as we have seen your progress through our business awards, you won one award, then you won 2 awards, then last year you won 3+1, the Supreme Business Award. We wish you well, but this question of improving financial literacy, I think, is a mission which young advisors like you, if you take, it will be beneficial to our communities. Because very often our people, they have the ambition of owning a house, but they really do not know how to manage themselves. They may be able to get a loan through somebody, but after getting, that's only the first step. After getting a loan, how do you manage that, and how do you progress, and as you say, become owner of more than one property?
See, it's a very simple thing. It's just a tip to all the viewers or the listeners. Simple thing, because I do very basic stuff. I don't do any fancy stuff. Your finances should be distributed into 3 departments, okay? One is your fixed financial commitments, which means what is your loan repayment, what is your insurance repayments, what is your daycare or any of the commitments that you cannot get away or from. Second is your tax repayment. I mean, those who are salaried,
Compliance.
they don't have to worry about it. But those who are self-employed, they have to know what their tax obligations are going to be. And your superannuation, which is Kiwi Saver in this country, that what those commitments are going to be. whether you are putting it 3%, 5%, 8%, whatever it is. Again, I'm not an investment advisor, but that is something which you have to understand. So that is a third. And the third department is where your variable costs are. And variable costs are the ones where you can control, because how much you want to spend on your food, takeaway, supermarket, and your other day-to-day expenses. But the key, which not many people understand when they are doing the budget, and that's where most of the people go wrong, is where they think that after all the expenses, whatever is the leftover, I may put it into savings. No, right from the day one, your savings should be part of your monthly or daily expenses that you allocate, that this is how much you are going to take it out, and that's how you will start saving as for future cash flow as well. So if you keep the three departments very clear and understand what is a good debt and bad debt. Good debt is your home loan, which is your good debt because it is going to give you the wealth creation in future. But bad debt is your car loan, credit cards, personal loan. Stop all of that. If you understand these differences, nobody can stop you from being financially well acumened,
Thank you, Rachna. In 30 seconds, give us something about 0800 Rachna so that people know what you can offer.
Okay, so 0800 Rachna is a personalized service, and it is vision for your long-term growth. If you're just looking for the rates, you could directly go to the bank. But if you're looking at a personalized growth and one-on-one advices, you need to approach 0800 Rachna, because we will find you the best outcome suitable for your needs.
So 0800 Rachna means one dials.
One-stop shop.
No, 0800 Rachna is your number.
Yes. So 0800 Rachna is 0800 722 462.
0800
722 462.
462.
So when it comes to loan, people should know only one name, 0800 Rachna.
Thank you, Rachna. I'm sure we'll have many more occasions to talk about other aspects of financial literacy, etc. Thank you for coming.
Thank you for listening to the Indian Newsling podcast.